Hi class, in this video we're going to do the Chapter 3 Foundational 15. So we'll go ahead and just work this out of Connect, and as necessary we will do some work here on the right hand side. So this is Bunnell Corporation. It's a manufacturer that uses job order costing. On January 1st, the company's inventory balances were as follows. Raw materials 40,000, work in process 18,000, and finished goods 35,000. Says the company applies overhead costs to jobs on the basis of direct labor hours. For the current year, the company's predetermined overhead rate of $16.25 per direct labor hour was based on a cost formula that estimated $650,000 of total manufacturing overhead for an estimated activity level of 40,000 direct labor hours. The following transactions were recorded for the year. So let's take a look. So there's a bunch of stuff here. A, raw materials were purchased on account for $510,000. B, raw materials used in production, $480,000. All of the raw materials were used as direct materials. C, the following costs were accrued for employee services. Direct labor, $600,000. Indirect labor, $150,000. Selling and administrative salaries, $240,000. Incurred various selling and administrative expenses, $367,000. Incurred various manufacturing overhead costs, $500,000. Manufacturing overhead cost was applied to production. The company actually worked 41,000 direct labor hours on all jobs during the year. Jobs costing $1.68 million to manufacture according to their job cost sheets were completed during the year, and jobs were sold on account to customers during the year for a total of $2.8 million. The jobs cost $1.69 million to manufacture according to their job cost sheets. Okay, so that's a lot of information. Now, we're going to go one at a time and see what the questions are asking us. So for number 1, it asks us, what is the journal entry to record raw materials used in production? So if we take a look, on B, it tells us we used raw materials in production in the amount of $480,000. It says all of the raw materials were used as direct materials. Okay, so just so we can take a look here, if we were to draw out our raw materials T account, let's take a look. It says we had $40,000 in there to begin with. If we look at A, it says we purchased another $510,000 of raw materials on account, right? So now it says of that $550,000 of raw materials, we used some in production. Now, it says all of the raw materials used were used as direct materials. So remember, direct materials, raw materials that are used for direct materials, that is moved to what account? Work in process, right? Any indirect materials are moved to manufacturing overhead. But in this case, since they tell us everything, all of the $480,000 of raw materials used is for direct materials, we know it's all going to just be moved to work in process. So how do we show that raw materials were used? Well, we're going to have to credit raw materials, right? We'd credit this account for $480,000, and if I credit something here, I need to debit something somewhere else, and that somewhere else is going to be work in process. Okay, so we can see here what is that journal entry. That journal entry is going to be a debit to work in process of $480,000 and a credit to raw materials for $480,000. All that's happening here is the cost of the materials used is flowing from raw materials into work in process. We're just moving it from one place to the next. So let's enter this in here. We have work in process, $480,000, and then raw materials, $480,000. Let's go ahead and score our answer. We'll give that a second. And it's all correct. Okay, very good. Let's move on to the next one. Okay. Number 2, what is the ending balance in raw materials? Well, looks like we almost did most of the work, right? We just filled in this T account here in the whiteboard. So now we're just going to have to fill in this T account for raw materials. So remember, they told us we started with 40,000. And I found that up here. Then we bought some more, right? It says raw materials were purchased on account for $510,000. So that's item A. So we want to label this as item A. That account was debited for $510,000. And we just now credited the account for $480,000, right? And that is related to item B. So we can see here that the ending balance in raw materials is $70,000, right? We had $550,000 on the left and $480,000 on the right, the amount that it decreased by, leaving us with $70,000. Let's go ahead and score that answer. And that's all correct. Okay. Let's see what the next question is asking us here. Number 3, what is the journal entry to record the labor costs incurred during the year? Okay, so for this one, we're going to have to take a look at where they're talking about the labor cost accrued and incurred. So it says, if we look at C, it says the following costs were accrued for employee services. It says there's direct labor of $600,000. There's indirect labor of $150,000. Then there's selling and administrative salaries. So we can just label that as SAG salaries of $240,000. So it says we accrued these costs, so we haven't paid them yet, right? So we owe those salaries and wages. So we just need to figure out where does this need to go. So where do we put or record direct labor cost incurred? What account will that go into? That needs to be moved to work in process, right? But what about the indirect labor cost? Since this is indirect labor cost actually incurred, right? We know for a fact that that's an actual indirect labor cost that will actually be moved or recorded in the manufacturing overhead account. But this would be actual overhead, right? Because that's an item, a portion of the overall total that we will determine at the end. So this is an actual amount of overhead. Okay. And then what about the selling and administrative salaries? The first two we consider to be product costs, right? Part of the cost of the product. What about the selling and administrative salaries? That's not a cost that goes into making the product, right? So instead of it being considered a product cost like these two, it would be considered a period cost. And period costs are simply expensed in the period in which they're incurred. So this would be considered a selling and administrative expense. Okay, and just as a reminder, when we're looking at work in process, what 3 categories of costs get debited to that account? It would be direct materials, just like we did up there, direct labor, which we just determined, and manufacturing overhead applied. Keyword there, applied. So we apply overhead to work in process, where as we figure out what bits and pieces of actual overhead are throughout the period, that we actually throw into the overhead account with a debit. But when we apply overhead, that's a credit to the manufacturing overhead account and a debit to work in process. Okay, so what they want us to do now is, what is the journal entry to record these labor costs that the company accrued and incurred? Okay, so we determined where they need to go, right? So the direct labor needs to be recorded in work in process. So we're going to debit work in process for $600,000. We're going to debit manufacturing overhead for the $150,000. And then we're going to debit the selling and admin expense account for $240,000. And then we're going to credit, remember we didn't pay it yet, we just accrued it, so we're just going to overall credit salaries / wages payable. And we're going to add these 3 together. When you add those 3 together, you should get $990,000. And how does this work out again? Just as a reminder, we look at that manufacturing overhead account, anytime you debit it, that's to record actual overhead costs. Anytime you credit the account, that's to record applied overhead, when we apply overhead to jobs. Because the actual amount, we don't know that the total until the end. So as we are made known of these different bits and pieces of actual overhead, we would debit this account as the period goes on, right? But we don't know what that total is going to be until the end. So as we're working on jobs at the same time, we will apply overhead to those jobs and credit this account and debit work in process as we're working on those jobs as well. All right, so let's copy this over. So we have work in process. That is for 600,000. We'll debit that account, and we'll debit manufacturing overhead for 150, and then we will debit salaries, selling and administrative. Here they call it just selling and administrative salaries, which is an expense account. I just tacked on the word expense there to just clarify that it is an expense account. Okay, so debit, we always debit our expenses, and then we will credit. Let's see what we have here that will match with salaries and wages payable. Looks like they just have wages payable here, so that's fine. So we'll just credit wages payable for $990. Okay, so let's score our answer. Okay, very good. We're good to go on number 3. Number 4. What is the total amount of manufacturing overhead applied to production during the year? Okay, well, we have enough information to figure this out. So we have to remind ourselves, how do we apply overhead, right? What's the formula for applied overhead? So remember, to apply overhead, you just take the POR that either is provided to you or that you calculated on your own times the actual level of activity, or in other words, the actual amount of the allocation base used. Okay, so we have our POR, right? They told us that the predetermined overhead rate is $16.25. That is per direct labor hour, so that's their allocation base. And let's see, how many direct labor hours did they actually use? So if we look in F, it says that the company actually worked 41,000 direct labor hours on all jobs during the year. So our actual level of activity is 41,000 direct labor hours. Now, why don't we use the 40 hours we estimated? Because that 40,000 direct labor hours that we thought we would use is what we need to calculate the POR at the beginning of the period. The estimated activity level is just used to calculate that POR. But once you have the POR, remember the POR is an estimate of what each direct labor hour is going to cost the company in terms of overhead. So once you have that POR, then you can actually use it once you actually start using direct labor hours to do work on jobs. So once, let's say we're a week in and you've spent another 10 direct labor hours on a job. Well, now you can make an estimate of what those 10 direct labor hours cost you in terms of overhead to work on that job. So then we can use that to apply overhead to that job since we've just done some work on it. Okay, so just make sure when you're applying overhead to always use the actual level of activity here. Okay, so let's do 1625 times 41,000 direct labor hours. So if you punch that into your calculator, you should get $666,250 of manufacturing overhead to apply to jobs throughout the period here. Okay, so let's do 666,250. We'll score our answer. And give that a second. Okay, there we go. So just a quick note, what would the journal entry look like to record this application of overhead? So remember, manufacturing overhead applied is one of the 3 categories of costs that get added into work in process, right? And if you look at that manufacturing overhead T account, to apply overhead, you credit that account. And if you credit overhead, you have to debit work in process. So the entry what they're not asking for it here, but let's do it anyways. To record that overhead applied, we're going to debit work in process for $660,250 and credit manufacturing overhead for that same amount. Okay, so that's what the entry would look like. Now, in reality, would we always do this as one huge entry at the end of the period? Not necessarily. Some companies might decide that at the end of every week or at the end of every month, depending on how long the period is that we're looking at, in this case a year, they might, probably what a common practice would be is at the end of every month, look at, okay, how many direct labor hours did we use this month? And then do an entry to apply overhead to work in process for that month. And then do it the next month and the next month. Here we're doing it for the whole year just to illustrate what the entry would look like and how to find that applied amount. But in reality, a company would be doing this more often, most likely at the end of the month, if not at the end of every week. Just depends on how often the company wants to update this work in process account and the overhead account. Okay, next question. Number 5. What is the total manufacturing cost added to work in process during the year? Okay, we can figure that out, right? So if we're going to draw a T account here, we already did a bunch to work in process so far for questions 1 through 5. So let's take a look here. I don't know why that is showing up as practice quiz, but we'll ignore that. So the work in process, the beginning balance they're telling us is 18,000, which isn't really relevant to the question itself. They're asking us how much cost was added in, but let's do it anyways. We have our beginning balance. And then what did we say are the 3 categories of costs that get added to work in process? We said it's direct materials, direct labor, and manufacturing overhead applied. Right? Not actual overhead, but manufacturing overhead applied. So if we scroll back up, remember when we used direct materials? We debited work in process for $480,000, didn't we? So to this T account, we can add the debit of $480,000. But didn't we also add direct labor cost? We did, right? Of $600,000. Okay, so we can copy that debit over. And just lastly here, we added the $666,250 of overhead applied to the account, right? So they're asking us how much total was added to this account for the year. So we just need to add these 3 together, right? We're just going to take $480,000 plus $600,000 plus $660,250. So the cost added, that comes out to $1,746,250 of costs added to work in process. It's just costs added for the period. Okay, so let's do 1,746,250. Okay, so, and specifically it's product cost, right? It's manufacturing costs that we added to work in process. That's anyways the only cost we add in there. Okay, we're scoring that answer. Okay, very good. Looks good. On to the next one. What is the journal entry to record the transfer of completed jobs that is referred to in item G above? So item G says jobs costing $1.68 million to manufacture according to their job cost sheets were completed during the year. All right. So for this, it's helpful to refer back to work in process. So remember, with work in process, as we work on jobs and incur direct materials, direct labor, and manufacturing overhead costs, at least in the applied form, we add that in to work in process here. So that's what's added in so far. But now they're telling us that of all of these costs in work in process, by the end of this year, we had finished some of those jobs. Now, if you finish a job, or 2 or 3, or however many, the cost of those jobs aren't considered in process anymore, are they? They're considered to be finished. If a job is complete, it's considered to be finished. So as soon as a job or jobs are completed, you have to move their costs out of work in process and into the next phase, the next inventory account, finished goods. So they're telling us of all of these costs here in work in process, 1,680,000 of it refers to the cost of the jobs that we finished in this period, in this year. So to move that out of work in process into finished goods, how are we going to do that? Well, we're simply going to credit work in process for the cost of the jobs we finished. Credit work in process, meaning taking it out of work in process and moving it to finished goods with a debit for that same amount. Right? So now we have enough information for that entry. So we are going to debit finished goods for 1.68 million, and we're going to credit work in process for 1.68 million as well. Okay, so let's go ahead and copy this over here. So we're going to debit finished goods and credit work in process. Okay, so let's go ahead and score that answer. And we're good to go. And just a little side note, reminder, remember the cost that we move out of work in process to finished goods, right? Anytime you're moving something to finished goods, that means you finished these products, these jobs, right? So the amount that you move from work in process to finished goods is referred to as your cost of goods manufactured. Okay, so if there's a question that asks you, what's the cost of goods manufactured this period? You're simply going to look at, okay, what's the cost of the jobs we finished? That's the cost of goods manufactured. In other words, the cost moved out of work in process into finished goods. Okay, on to the next one. Number 7, what is the ending balance in work in process? Okay, perfect. We just get to copy everything over, right? So we have the beginning balance of 18,000. And then we have that debit of 480. And what item does that refer to? That's back to B, right? Item B of direct materials used. And then we have that debit of 600 for the direct labor, right? And that refers to item C. And then we have the manufacturing overhead applied. So that's a 666,250. And that matches up with item F. And then finally, we have this credit of 1.68 million. And that relates to item G. So we can see here, taking that beginning balance into consideration, plus all the costs added, minus the cost of the jobs we finished, leaves us with $84,250 in work in process. Let's score. And we're all good to go here. And just a little side note, if you're doing this Foundational 15 on your own, before you score your answer, you can check your work as many times as you'd like. So remember that button in the right-hand corner. Number 8, what is the total amount of actual manufacturing overhead cost incurred during the year? Okay, so we're trying to find actual manufacturing overhead cost incurred. So we just go through this list of items that they told us of known overhead amounts that was incurred, right? So it's not A, it's not B. That refers to raw materials purchased and direct materials used. So we're going to have to start at C. It says the following costs were accrued, right? Where we recorded the direct labor, indirect labor, and SAG salaries, right? Well, indirect labor, what is its category? It's not direct materials, it's not direct labor, so it must be part of manufacturing overhead, right? If it's a product cost but it doesn't fit into those first two categories, it must be manufacturing overhead. And remember, manufacturing overhead refers to any of those indirect manufacturing costs, and indirect labor is one of them. So That's one amount that we know for sure we incurred, right? There's no doubt about that. That's not an estimate. We'll go on to D. Incurred various selling and administrative expenses. Well, selling and administrative expenses, that's not product cost at all, right? So that's not manufacturing overhead. E. Incurred various manufacturing overhead costs like depreciation, insurance, and utilities in the amount of $500. So that's an amount they know they incurred, right? And they tell us it's overhead, so that's another category of overhead that was incurred. So it's everything but indirect labor. So these other indirect costs. So that would just be other manufacturing overhead costs that they incurred. And then it just talks about manufacturing overhead applied, right? That's not actual cost, that's applied overhead costs. So, and then G and H just talk about jobs we finished and then jobs sold. So those are the only two items of actual overhead that they provided us. So it looks like the total amount of actual overhead incurred is $650,000. So that's actual. What does that consist of? This consists of indirect labor and stuff like depreciation, insurance on the factory, utility bills, and stuff like that. So that's the actual amount. Okay, so in this T account, remember the actual side is the debit side. So after all those entries, after the entries to record all of this, there should be $650,000 here on the left-hand side. Okay. So let's go ahead and add this in here. Score it real quick. Very good. And by the way, if you're doing this on your own as practice, every time you score the answer, there's an explanation of the answer down below. Number 9. Is manufacturing overhead underapplied or overapplied for the year, and by how much? Well, we know what the actual amount is, right? We just did that. But didn't we apply overhead to the account with the entry, right? Let's just go back to see what that was. That was here on number 4, right? We debited work in process and credited overhead for $666,250. So the applied side is the right side, right? So after we made that entry, we should see $666,250 on the right-hand side. Okay, so we have our actual on the left and our applied on the right. So are we over or under applied? So to figure that out, we need to see where the balance lies. So it's heavier on the right side, the credit side. So the balance will be on the credit side. So let's see for how much. Let's find the difference between the two. That's $16,250. So is this over or under applied? So remember, this is my actual side, and this is my applied side. Which side is heavier? This side, right? So we actually ended up being over applied in the amount of $16,250. We applied $666,250 based on that pour, so we overshot it just a little bit because we actually only ended up incurring $650,000 of overhead. So we are over applied. Score it. There we go. Looks good. Number 10, what is the cost of goods available for sale during the year? Okay, and by the way, that was number 9 as well. So the cost of goods available for sale. Okay, well, let's remind ourselves of what the cost of goods available for sale would refer to. So from a manufacturer's point of view, the cost of goods available for sale is going to be the beginning finished goods balance plus the cost of goods manufactured. In other words, the cost added in to finished goods. So if we draw that T account, if we go and take a look here, the beginning balance in finished goods for the year was $35,000, but we added some more costs in there, right? We finished some jobs. So remember this entry here from number 6 is where we move the cost out of work in process into finished goods for the cost of the jobs we finished. So here we debited finished goods for $1,680,000. So this is my beginning balance, and then this 1.68 million, remember that's our cost of goods manufactured. So our cost of goods available for sale, in this case, is going to be what we had to begin with in finished goods, what we had available to sell, but then we finished some more stuff during the year, right? That cost us 1.68 million. So the cost of the goods we had available for sale for the year will simply be those two added together, plus 35,000. So that should be $1,715,000 of cost of goods available for sale. Okay, so remember, it's your beginning finished goods balance plus the cost of goods manufactured for the year. Let's score. Very good. Number 11. What is the entry to record the cost of goods sold referred to in item H above? Okay, cost of goods sold. So here it says jobs were sold on account to customers during the year for a total of 2.8 million. So that would be an entry on its own, right? Where we would debit accounts receivable and credit sales. But they're asking us to do the journal entry just to record the cost of goods sold, and they tell us the jobs we sold for 2.8 million cost us 1.69 million to manufacture, right? So how do we record cost of goods sold? Well, they tell us what the cost of goods sold is. It's 1.69 million. So we're going to debit cost of goods sold for that 1.69 million. And in accounting 2, when we recorded the cost of a sale, what were we used to? We would debit cost of goods sold and credit inventory. That's still correct, but since we're a manufacturer, we have to use a specific inventory account since we have different phases of inventory. So what would that inventory account be that we have to credit? Has to be finished goods. 1.69 million. Okay, so anytime we have to record the cost of goods sold as a manufacturer, we would debit cost of goods sold and then specifically credit finished goods, that specific inventory account. And if they had asked us to record the actual sale itself, then remember we would have debited cash or accounts receivable, but they said they sold it on account, so accounts receivable would be debited for that 2.8 million, and we would have credited sales for 2.8 million as well. But this is just the cost of the sale being journalized. Okay, that one looks good as well. On to number 12. Okay, number 12. What is the ending balance in finished goods? Okay, well, we can again just copy over what we just did. So we know the beginning balance is 35,000, but then we debited the cost of goods manufactured to the account, right? The 1.68 million, and that is from item G. So we'll label that as item G. And then lastly, the last time we touched finished goods here was when we now sold some stuff, so we had to credit finished goods for 1.69 million, and that relates to item H. Okay, so with what we started with in inventory, specifically finished goods, and plus what we added in minus what we sold, the cost of what we sold, looks like we have, oh, there's an extra zero. I thought that looked a little bit off. We only have 35,000 to begin with, so the 35,000 cost of inventory we started with plus what we finished this year minus the cost of what we sold leaves us with only $25,000 of finished goods inventory, the cost of finished goods inventory left still to be sold. So that's our remaining cost of goods available for sale at that point in time, ending the period. Okay, let's see what our score comes out to. We are good to go. Okay, on to number 13. If this will load. Okay, there we go. Assuming that the company closes its underapplied overhead or overapplied overhead to cost of goods sold, what is the adjusted cost of goods sold for the year? All right, so let's go back to our manufacturing overhead T account. So remember, we figured out that its balance is on the right-hand side, overapplied. So I'm going to write 16,250 on the right-hand side here. So the method we use to close any over or underapplied overhead is to close it to cost of goods sold. So I want to close out manufacturing overhead. I want to zero it out. So since it has a credit balance, we will have to debit manufacturing overhead. And since I'm debiting manufacturing overhead, I will need to credit cost of goods sold. Okay, so entry-wise, it would look like this. Debit manufacturing overhead for $16,250 and credit cost of goods sold for $16,250. Now, why is that? Remember, we overshot a little bit our overhead. We only incurred an actual amount of $650,000, but we applied $666,250, right? So we overshot it a little bit. And that applied amount, where did that get thrown into? That got thrown into work in process, right? And what happens to the cost in work in process eventually? They get thrown into finished goods. And what happens to those finished goods costs eventually? They go to cost of goods sold. So that overshot amount, that amount that was too large, will flow through to cost of goods sold eventually, right? So now to fix that, we're going to decrease cost of goods sold. Since it was too much that would end up flowing to cost of goods sold, we're going to decrease cost of goods sold here for that over-applied overhead. So cost of goods sold here, you can see to zero out this over-applied amount, we end up crediting cost of goods sold, which decreases cost of goods sold by $16,250. Okay, so what's the adjusted cost of goods sold? Well, see, in the entry where we recorded the cost of that sale, remember in H, the cost of the goods we sold was $1.69 million, but that $1.69 million presumably includes some over-applied overhead, just a little bit too much. So this cost of goods sold, we thought it would be $1.69 million for the year. But after this entry here to adjust for that over-applied overhead, we're going to subtract $16,250 from that amount, right? Because it's a little bit too much. Okay, so we're just adjusting for that overestimation. So 1.69 million minus 16,250, that gives us an adjusted cost of goods sold of 1,673,750. Okay, so this is our adjusted cost of goods sold amount. So this is where we reconcile those differences. So although the applied overhead isn't exactly accurate throughout the period, now we're fixing it. Now cost of goods sold is accurate. Okay. $1,673,750. Okay, let's score. Very good. Only two more to go. 14, what is the gross margin for the year? Well, what's gross margin again? Gross margin is going to be your sales minus your cost of goods sold, which we just found the accurate number for, right? What's the amount of sales we had for the year? We sold jobs on account for 2.8 million, right? If you look at item H. And now we found an adjusted or accurate cost of goods sold. So our cost of goods sold isn't 1.69 million, but more accurately, it's 1,673,750. So our sales minus our cost of goods sold should give us our gross margin. Okay. So that is a gross margin of 1,126,250. So that's how much money we would then have left to cover all of those other costs, all those other operating costs and non-operating costs. Okay, so that's our gross margin for the year. We're good to go. And then one more. Last one. What is the net operating income for the year? So remember, net operating income is just revenues or sales minus all of our operating expenses. They don't give us any non-operating expenses like interest expense here, so we're only going to be able to calculate net operating income anyways. So your net operating income is just going to be your sales minus all of your operating costs, or in other words, your gross margin minus your other operating costs, because the gross margin already we subtracted one major operating cost, right? Cost of goods sold. So we can simply take that gross margin, right? We said it's the money we have left to cover all the remaining costs minus all the other operational expenses at this point, right? Because cost of goods sold is product cost, and the only costs we haven't yet subtracted are those period costs, so those expenses. So let's take a look. On C, we have those selling and administrative salaries, which is considered to be an expense, right? So we'll subtract that. That's not part of product cost. We didn't include that yet. And what about D? We incurred various other selling and administrative expenses, right? Like advertising, travel costs, so on and so forth, of $367,000. So then you would just double check, are there any other expenses we missed? And there aren't. So let's take that gross margin, subtract the selling and administrative salaries, and then the selling and administrative expenses. And that leaves us with a net operating income of $519,250. That's our net operating income. So that's how much money would be left then to cover any non-operational costs. So if there's any interest expense, any tax expense, that's what that would go towards. All right, let's score our answers. And we're good to go. Okay, so I would recommend once you go through this with me once, it's a really good thing to go back into this Foundational 15 and see how well you do. Try and do it without any notes and go through these and see how far you can get. And that's really a good gauge of the mastery of material. All right, so that's it for our Foundational 15. Good luck with the rest of Chapter 3.